Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, October 23rd, 2020. Happy Friday, everyone. I am Frank Ochoa, aka PivotBoss, and here is a look at the daily time frame of the ES. In the previous session, one thing we saw was a push through three-day lows here. Price drops through three-day lows, hit a low just above the 3,400 level, and then bounced. By the end of the day, we talked about price needing to be above the previous session's low, above the previous session's midpoint, and if price really intended to go higher and bulls were really going to reclaim control, then bulls needed to get above 3460, and we are currently driving through 3460 at the moment. So again, this market has shown early signs of rejection on the lows and early signs of a continuation higher. This pullback here with the failed low below three-day lows may get things pushing higher. Now the one thing is we're just shy of election day here, so we could be looking at mostly range-bound action heading into that day there. Whether that means up and back or down and back up, it may not mean do this and then go to the election, but we'll see how it develops here. Overall, if price can stay above 3460, there's the potential to continue to climb toward 3,500 and maybe beyond. Any failure to hold 3450 today, that would open up quite a bit of a return lower. So 3450 would be kind of the failure point here today. All right, let's take a look here at the NQ. Now, one thing you're seeing with the NQ is a rejection of three-day lows, but not quite a bullish thrusting bar back up, whereas the ES pushed through the previous session's midpoint. The NQ didn't quite do that. It did reject the lows, but for the most part, this one remains inside the developing 4-day range, 5-day range. This range really spanned 585 up to 800 yesterday. With the drop down yesterday, with the low we saw here, it's now basically 11.5 up to 11.8. But we're right in the middle of that range right now, testing the previous week's low, which is 11.687s. We're right at that zone right now, and we really haven't been able to get above the previous week's close price, which is 11.8. So while we could see a bit more strength here, bulls really need to get it above 11.8 in order to see this thing push higher. Otherwise, we could get to 11.8 and just come right back down and continue inside the range here. So right now, again, mostly range bound for the NQ over the last several sessions. Really needs above 11.8 to really get going to the upside. A failure to hold 11.6 opens up perhaps another retest of lows. Let's take a look now at crude oil. Crude oil is stuck trading around the $40 level yet again. We saw the rejection up here develop above 41.50, and that snapped price right back to 40. Right there. $40 is the key range midpoint. It's the FOMC key level. Snapped right back to it and currently trading just above it, but it has been a sticky level and continues to be that, and could remain that way for a while. Again, if price can finally get through 41.50 and hold 42s, it opens up some upside into 44 and perhaps beyond. But right now this market is stuck between 41.50 and 39, and we are kind of right in the middle of that zone. So again, we could continue to see chop back and forth until we see directional conviction one way or another. All right, let's take a look now at gold futures. You'll see with gold here, this one also is stuck. 1908 continues to be kind of that level that it just trades around and chops around. 1900. You can see on the upper end of this range, we haven't been able to get through 1939. I've mentioned 1940 to 1950. That's the real breakout zone here. If it can get through that zone, it opens up some upside. But we have seen a pattern of lower highs, lower lows, and now that we've built out this range over the last month, do we need to get one last flush before we bounce? So if we were to break down, it could become yet another good buying opportunity like this one here, back up. And also, if price were to break through 1950, it could be a nice continuation to the upside. We may not get the flush. So if we do get a flush downward, I believe it'd be a great opportunity to look to it, to trap and reverse this thing back up. And also, if we were just to break through 1950 and start to run, that could basically trigger a very significant markup phase over the course of several weeks and perhaps even several months. So those are the levels here to watch here for gold as we head into the weekend. Alright, that is it for now. Again, happy Friday. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.